Good morning, everyone, and welcome to the Trade Talk podcast. Globally, equity markets are under pressure. Most of the indices are trading with losses, and if we go through with the global cues, then in that JP Morgan now sees a 35% chance the US will tip into recession by year end, which is up from 25%. It also expects a 30% chance of the Fed and its peers keeping rates high for long, compared with a 50-50% assessment as recently as 2 months back. So there also the chances of cutting interest rates are turning higher. Asian stocks and US stock futures dropped, extending a decline in Wall Street after a week $42 billion of sale of securities. The yen is strengthening. It is slightly up from its previous close. JP Morgan said 75% of carry trades are closed as the recent slump wiped out year-to-date returns. In brief, we are of the view that the market is still facing uncertain news flow. It is finding difficulties to sustain at higher levels or to cross major levels, and on the downside it has support of multiple long-term averages as well as retracements, which is not allowing the indices to trade below the same. The markets over here, if we see, then they are in the range 24,400 going to act as major resistance. Yesterday also the market failed to cross the level of 24,400, although it closed at the highest point of the day. But while looking at the GIFT Nifty, we are again going to see lower opening by 150-200 points, which will again send the market towards 24,200, 24,150 levels, where the market is having support of important retracement. Below that, the chances of hitting 24,050 and 23,900 would turn bright. A drop below 23,900 will be negative for the market. So in that case, we need to be careful. We could see the levels of 23,650 or 600 very quickly. But crossing 24,400 will help the market to move towards 24,550, 600 levels. So we are in between and we need to be careful. We need to follow specific levels while trading. For the Bank Nifty, there also we saw genuine recovery from lower levels. In fact, 49,500 is acting as major support for it since the last so many days and weeks. It is at 50% retracement level, as well as it is very close to 100 days simple moving average. So based on its formation, we are of the view that the Bank Nifty is heading for at least 50,700 or 750 in the near term. But in case if we see the Bank Nifty is dropping below the levels of close to 49,500, then we could see further more weakness in the market. Apart from this major indices, metals as well as IT index should be on the watch list. Select oil and gas stocks should do well, because there also we saw decent buying interest in stocks like ONGC, Coal India, GAIL, as well as Gujarat Gas. So there also we are going to keep a close watch, and based on their reversal formation we will come out with specific recommendation. Till then we need to follow specific levels which we have given in the update. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me, and have a great day to all of you.